US economy has grown by less than expected in the first quarter, dealing a fresh blow to President Joe Biden's hopes of a pre-election rate cut. And that's as high interest rates continue to weigh on borrowing and spending. Gross domestic products expanded by 1.6% in the first 3 months of 2024. That's well below analyst expectations of 2.4%, and that's compared with a 3.4% expansion in the final 3 months of last year. Consumer spending rose 2.5% during the period, down from a 3.3% expansion in the previous quarter. The figure is also below the 3% Wall Street estimate. Thursday's data release led investors to push back expectations of a move by the Federal Reserve. The Personal Consumption Expenditures Price Index, that's a key inflation component, increased 3.4% in the quarter, marking its biggest gain. Although inflation has slowed sharply from a peak of 9.1% in 2022, it's yet to fall back to the Federal Reserve's 2% target. Traders are now no longer fully confident that the Fed will deliver its first rate cut by September. But despite bad news on the interest rates front, US tech giants surge in late trading and strong quarterly results from Microsoft and Google's parent Alphabet fueled confidence in the sector. Microsoft posted a 20% jump in net profit in the first quarter to nearly $22 billion. Higher than expected AI consumption boosted its cloud business. Revenue in its cloud computing platform Azure grew at 21%. That's compared with the previous year when many customers were cutting their cloud spending. Microsoft took an early lead in the race to dominate generative artificial intelligence thanks to its $13 billion investment in OpenAI. Shares in the software giant surged 4% on the earning news. Alphabet has unveiled its first ever dividend of 20 cents per share, as well as a new $70 billion share repurchase after reporting revenue and earnings ahead of estimates. Net profit at Google parent jumped 57% to $23.66 billion, thanks to a surge in search and advertising units. Shares shot up 15% in after-hours trading, increasing its market value by $300 billion to over $2 trillion. On Wednesday, Meta also reported forecast-beating earnings for the first quarter, thanks to a surge in ad sales after a post-pandemic slump. Revenues rose 27% to around $36.5 billion. That's the highest quarterly sales figure since the Facebook owner went public in 2012. But despite solid results, shares in Meta plunged more than 10% after it announced higher than expected spending on artificial intelligence. And now let's head to Naples in Italy and speak with Pierluigi Paganini, who is the CEO and intelligence expert at Cyber Horrors and Cybersecurity. Thank you very much for being with us today.
Thank you.
So, Professor, we've actually got some solid earnings so far in the US. What is all of that signaling?
Microsoft and Alphabet saw a significant growth in their cloud computing platform AI solution. There is a high demand for cloud services despite economic concern. This demand will continue to grow. Microsoft also highlighted the role of the investment in artificial intelligence, and artificial intelligence investment aims at boosting its cloud business. Many companies today are working on AI solutions that will drive cloud adoption, and this will be the trend of the next month. However, we have to consider that these positive results might not be representative of the entire tech sector. The search power and the capability to develop new solutions is concentrated today in a few hands, in the hands of a few tech giants, that have an immense power on a global scale. Tech sector is composed by millions of startups that risk to be suffocated by this approach.
Now, that's interesting, and the so-called Magnificent Seven, right? And they keep going up on the stock exchanges. What do you think the trajectory of the NASDAQ in particular will be leading up to November and to the presidential elections in the US?
Good question. And to reply to this question, we have to consider various factors, such as policy decisions, market evolution, and also global economic condition. Some potential impacts include, for example, in case Trump could be elected, for example, a cut of corporate tax potentially boosting profits and investor confidence. but this is not necessarily good for the overall sector because, as I told you before, the overall tech sector is composed by millions of startups. Trump's administration in the past also demanded the regulation across various industries. There will be also trade tension with other countries, and this will have also a huge impact on those multinational corporations with a global supply chain. And finally, probably another aspect to consider is that president announcement may trigger stock market volatility, and a re-election could prolong market uncertainty, influencing corporate investment decisions.
Pierluigi Paganini, thank you very much for being with us today.
Thank you.